TradeTheNBI.com. This is John. This report is for the 3rd of February. The excitement continued as the market continued to rally off of the hawkish Fed comments, meaning that the market decided to assume that everything he was saying was just the opposite, that he's going to continue to tighten. And the market just doesn't believe it because they think that rates have to come down. Obviously, some things become unaffordable, not just in the regular economy, the government, obviously, but it's a little misleading because all the government really at this particular point is paying the Fed, who's buying up most of the debt. So it's just a circle going around and round, but it will look bad from a budgetary standpoint. In fact, it'll look impossible because even at the 1% rates, it was already massive deficits. It just skyrockets them numerically. That whole debt ceiling fight, you wouldn't be able to raise it enough trillions if the Fed kept going at the level that it needs to get somewhere. But from a reading standpoint, at this particular stage, you had magenta over yellow, clean. There's just no real short activity from NBI white at all. And green strong above cyan. Cyan's back below red. Happened after the first push. So cyan under red on DOC is always buy. Nothing you have to do. Obviously, we're seeing a slight pullback here in pre-market. Nasdaq a little bit softer from that reading. You can see it's already pivoted lower, but still extremely strong from that cyan under red. It has not changed at all relative to the S&P. Yes, still positive extreme, so there will come a time, but not with magenta over 33, and that is just not going to happen on the NBI readings. So it is what it is. You're going to just get normal fluctuations. So it's one of those where dips become attractive from a buy standpoint, particularly intraday on the turnarounds. And again, Treasury's getting bought up, reducing the yield even further. Well, continuing after that rude trade station interruption, but flipping over to oil, nice pullback last couple of days has brought us into the mid 70 range. We get down below that 70, got a good chance of things recovering somewhat. At least the incentive economically would be improved and certainly would reduce costs across the board. So that's definitely something I'm keeping an eye on because that would justify the market exuberance if they believe that oil prices are going to come down significantly. And by that, we need to get down towards the 50 range. But ideally, anything below the 80 is considerably helpful relative to where we've been. From a gold standpoint, just fell back to the 76%. We could see that that was starting to take place as the shakeout was drafting. DOC Magenta had already, MBI Magenta had already pivoted lower here. And it's a nice fallback. It solved the positive extremes, not completely. It took care of this one on the dip a couple days ago, but we still have a few broader ones that are a little bit further back, which would take us into the mid 1860 range. So it's going to be some back and forth with that. It just depends. I mean, as soon as you get a headline that inflation is cured, gold's going to feel it really fast. From a Rainer standpoint, still in the twilight zone here. Um, Nothing but problems getting reported out of the eurozone. So the Fed continuing to tighten, and the euro goes higher. Now, some will claim that the euro fell dramatically. I don't necessarily agree with that. When you look at the production capabilities of what's going on in Europe right now, it's pretty dismal. And from a Bitcoin standpoint, nicely above that 22.8 range. So being up here at 23.6, a little breathing room from that algo support range. And that was pretty strong support. Once it cleared that hurdle, it's finally stabilized. Same thing with ETH, just kind of stable at this particular point. Um, this is actually a good viewpoint, when you see the MBI readings fading like this, but magenta remaining over, fairly bullish because now you're going to get a complete reset and be able to push back. It's the same thing we see when we get DOC red resets, even though price either goes sideways or pretty much holds up. And we've already had the shakeout dip back below, moving back over to 18 from an ETH standpoint. It's not as unusual as it is for regular markets that we see those kinds of extremes coming out of the crypto space. Flipping to a lovely 5 minute because my TS decided to do its wild creative thing. But it was interesting because we had that nice run up for the most of the day, and then we had just the plunge that came through later on and sort of negated most everything. And now we're looking at a little bit of post market softness around 41 60 range. So this is going to be that roller coaster. I think that we're going to get a lot of it because there's still a huge argument to be made to the downside, much harder argument to the upside. But when does that ever stop anyone? So there you go. Look for me on the Skype chat. Trade well. Have a good one.